If you own an industrial or warehouse property, there is a strong chance you are depreciating it too slowly, not because you made a mistake, but because most owners default to standard depreciation rules and never look deeper. In this video, we're going to explain how cost segregation works for industrial and warehouse properties, why it is often overlooked, and how it can significantly improve cash flow for owners and investors. Let's start with the foundation. Industrial and warehouse buildings are typically depreciated over 39 years under standard IRS rules. That means the entire structure, systems, and improvements are grouped together and written off very slowly. But in the real world, industrial buildings are not made up of a single asset. They contain electrical systems, specialized wiring, concrete pads, dock equipment, lighting, HVAC components, plumbing, site work, and exterior improvements. Many of these components do not last 39 years. Cost segregation is the process of identifying those components and assigning them their proper depreciation lives based on IRS guidelines. Instead of depreciating everything over 39 years, cost segregation allows certain components to be depreciated over 5, 7, or 15 years. This accelerates depreciation into earlier years without increasing total depreciation over the life of the property. Now let's talk specifically about industrial and warehouse buildings because this property type has unique advantages. Industrial properties often include a high concentration of qualified short-life assets. These may include specialized electrical systems for machinery, reinforced concrete slabs, process piping, compressed air systems, interior build-outs, dedicated lighting, and loading dock equipment. Exterior improvements such as parking areas, fencing, drainage, yard lighting, and paved surfaces may qualify as 15-year land improvements rather than long-life structural components. When properly identified through an engineering-based study, these items can represent a meaningful percentage of the building's depreciable basis. In many industrial properties, a cost segregation study can reclassify 15 to 35% of the total depreciable cost into shorter-lived categories. The exact percentage depends on the property's design, use, and level of specialization. Let's walk through a simplified example. Imagine you purchase a warehouse for $8 million excluding land. Under standard depreciation, you would recover that cost slowly over 39 years. With a cost segregation study, $1.5 to $2.5 million of that purchase price might be identified as short-life assets. Those assets would then be depreciated much faster, creating significantly larger deductions in the early years of ownership. This reduces taxable income immediately and improves cash flow when capital is most valuable. For industrial owners, this increased cash flow is often reinvested into equipment upgrades, facility expansion, or operational improvements. Now let's address a common misconception. Many owners assume cost segregation only works for office buildings or apartments. That is not true. Industrial and warehouse properties are often excellent candidates for cost segregation because of their mechanical systems, heavy infrastructure, and functional layout. In fact, properties with specialized use frequently produce stronger cost segregation results than simpler buildings. Timing also matters. Cost segregation is most effective when planned at acquisition or after major construction or tenant improvements. However, it can also be applied retroactively. If you already own an industrial property and have never completed a cost segregation study, you may be able to catch up missed depreciation in a single year using a change in accounting method. This can result in a substantial one-time deduction without amending prior tax returns. Now let's talk about compliance. Cost segregation is not an estimate or a rule of thumb exercise. The IRS expects these studies to be supported by engineering analysis, construction cost data, and clear documentation. A high-quality study includes asset breakdowns, depreciation classifications, and detailed narratives explaining why each component qualifies for accelerated treatment. This level of documentation is critical for audit defense and long-term tax planning. Another important consideration is bonus depreciation. Assets identified through cost segregation that have recovery periods of 20 years or less may qualify for bonus depreciation, depending on placement in service dates and current tax law. This allows eligible components to be deducted even faster, potentially in the first year. That combination, cost segregation plus bonus depreciation, is what creates the largest cash flow impact. However, not every property is a fit. Factors such as purchase price, tax bracket, income level, and holding strategy all matter. That is why cost segregation should always be evaluated based on numbers, not assumptions. It is also important to understand depreciation recapture when the property is sold. Accelerating depreciation does not eliminate taxes permanently, but it does improve after-tax cash flow through the time value of money. For many industrial owners, the benefit of using capital today outweighs the future tax implications, especially when paired with long-term strategies like reinvestment or 1031 exchanges. The bottom line is this: cost segregation does not change how much depreciation you receive. It changes when you receive it. And for industrial and warehouse property owners, accelerating depreciation can strengthen cash flow, support growth, and improve overall return on investment. If you own an industrial or warehouse property and want to know whether cost segregation makes sense for you, the next step is simple. Visit costsegregationguys.com to request a free, property-specific analysis. Their team specializes in engineered, audit-ready cost segregation studies tailored to industrial and commercial properties. Understand your numbers, improve your cash flow. Visit costsegregationguys.com to get started.